Patrick Findaro here, founding partner at Visa Franchise. Jason Smith joining us with Fix My Books. He's part of another family business, like Visa Franchise started with my brother, but Jason started with his wife.
Yeah.
Ariel and Jason were two Visa Franchise clients. We helped support the business plan and different endeavors for them to go directly for the green card. A lot of our Canadian clients tuning in are maybe thinking about moving to the US on a temporary basis, like the E2 visa, O1 visa, depending on if we're able to document their top talent, similar to the EB1A. Or some might be going directly for the green card path, like the EB2, EB1, or even the EB5. So we'll talk a little bit about the visas, as there are some that are more temporary and some that are more permanent, like the green card, the EB1, EB2, EB5 category. But I want Jason to be the star of today's show and really focus on the fiscal aspects, the accounting aspects, and especially demystify what it means to move to the US and not necessarily rush this move and sell all your assets in Canada and wind things down, but at times taking baby steps depending on what your end goal is. So Jason, maybe you have a pretty unique background. Maybe you could talk just a little bit about yourself and your own journey across what, 3 continents, 4 continents?
Yeah, so I was born in Australia, and I left there many years ago now, when I was quite young, and I moved to the Philippines, where that's actually the homeland of where my mom is from. I met my wife there, Ariel, and then we moved to Hong Kong after that, and then things got a bit tumultuous there. So we actually decided, where do we want to live next? And we decided to move to Canada. And so in 2019, we landed in Canada. We became citizens in Canada. We set up businesses in Canada. We've hired people in Canada. And then around 2023, 2024, we started looking at expanding our options in terms of our business. And then we just thought, oh, look at our nearest neighbor. That's
market down south.
Yeah, probably the best market to go to in the Americas, because they speak English, very similar cultures. And then, we looked into what it would take to move there, to expand our business there. And, we found you, Patrick. And yeah, that's kind of where the journey began.
Was it off YouTube, or how'd you come across us again?
Yeah, so we actually were just searching YouTube. A lot of the things,
you were watching one of these videos.
Yeah, so it's the same with a lot of business owners. How they find us is my wife makes a lot of YouTube videos on how to do certain bookkeeping or accounting concepts, and yeah, that's how we found you as well.
That's great. And then for you, I guess with our platform, sometimes clients come to us with like a preset idea, but with our network of attorneys, we're able to provide different solutions. And what a client comes to us saying, maybe they want to do the E2 visa, but after we're together with the attorneys, they're able to really dissect what your true immigration as well as business objectives are. There might be a pivot.
Yeah.
But the third stool was the accounting side.
Yeah, so you did that with us. And so, several years ago, we started Fix My Books, which is a bookkeeping and accounting firm. And then we just realized that, Canada's good for small business, but the US is great for small business. And, that's, who the clients that we service. And then, we found you, and we were thinking, perhaps E2 visa, or do we qualify for this EB2 visa, NIW visa? There were just so many different ones to choose from, and it was, we're good at forms and we're good at accounting, but we're not good at, even though we've moved, visas are a whole different thing. So we thought best to approach someone that knows this area, especially with the US, because you don't want to make a mistake on your application. You don't want to apply for.
You can't come for 10 years. And
Yeah, exactly. You don't want to apply for an E2 visa when your real intent is to, move there and immigrate there permanently. And you don't want to apply for a permanent residency visa when your intent is simply to just do business there. So yeah.
That's well said. And I mean, how I always say it when clients are coming to us, and whether they're looking to buy a franchise, start their own independent business, uh, is there's three items that we have to consider. There's the investment opportunity and risk. There's the visa, getting the visa, but also the risk, and then there's the accounting side. And
Yeah.
I find it's difficult to balance all three. And you might have a case where someone wants to move and by August enroll their kids, where that might not make the most business sense and might not make the most accounting sense. So our job is to really focus on the immigration side and the business side,
Yeah.
and help with that. But then you have the other component, which is tax and accounting. So I think that's where you, Jason, can provide a lot of value, and a lot of the questions that we've had our clients ask I want to go through, but I want to also open it up,
Mm.
especially to those Canadian clients and viewers. Just feel free to type in any questions that you have, and I think Jason will be kind enough to try his best at answering them.
Yeah.
But I guess, Jason, maybe just start. What determines tax residency in the US versus Canada?
Well, with both Canada and in the US have their own sort of criterias. So Canada, it's ordinary residency, where it's basically, are your family there? Is your home there? Is your work there? Even I had a case the other day, even someone who came in on a temporary work visa and then decided to leave because they got the temporary work visa, that was an intention to work there and earn money there, and therefore they're actually a Canadian resident. There's also 183-day rule and part year immigration. So they moved part year and now they're a tax resident. US is slightly different. So US is one of the only countries, one of few countries which actually tax based on citizenship, as well as permanent residency. So the green card. They also have the substantial presence test, which is basically looking at the last 3 years, how much time you spent in the country, and then doing a mathematical formula to work out when you became a resident. And you can also do various elections. So what that is you'll find out when you ever do a tax return in the US, there are several types of things you can do called elections, and it's whether you want to classify things a certain way. So you can do things where you want to elect to be a resident the full year in the United States. And you'd think, why would you want to do that? Well, because you can take the standard deduction, which is a really good deduction, and save you a lot of money on taxes. So, there are different ways you can go about doing things.
Can you technically be a resident of both countries? Like, could a Canadian move down to Florida on an E2 visa, spend 200 days, and still be a tax resident of Canada?
Yeah, they can. However, this is where the U.S. Canada Tax Treaty comes in. They want you to use the U.S. Canada Tax Treaty. So in this case, it would be Article 4. And it's because they want to be able to say, okay, which is your actual tax home? So that's based on a variety of different things, which you can see in Article 4. And they don't want you to be sort of claiming benefits in both. So standard deduction that I talked about before, they don't want you to be able to claim that, as well as, if you're not a tax resident in the US. Very similar for Canada as well.
So they really want you to stick to that treaty. And I found, whether it's U.S. with the U.K., U.S. with France, U.S. with Canada, that's where it really pays to have an expert that really works a lot of those binationals. So you're not paying them to go through Article 4 and all these for the first time to determine what works.
Yeah, I would refrain from trying to do this yourself a lot of the time. Sometimes you just have to have the mindset that I need to pay someone, especially because this stuff is not.
Before, you don't want to be the
Yeah,
guinea pig where it's the first time they're pulling out that treaty.
Yeah,
where
and the penalties are big as well. You know, when you misfile tax returns, especially in the United States, and you're claiming things that you're not entitled to, you're going to get in quite a bit of trouble.
and how about we've had a lot of Canadians that have successful businesses. It could
Mhm.
be something like a property management business or home renovations, physical type business providing a service, as well as e-commerce
Yeah.
entrepreneurs that are selling into the Canadian market as well as the U.S. market. How should they? Any special considerations for managing the Canadian business while they're legally residing in the U.S.?
Well, if they want to keep the Canadian business open and they want to actually move to the US at the same time, they're, you're going to run into some issues. You firstly, when you become a non-resident of Canada, you're going to lose something called your CCPC status, so your controlled Canadian corporation status, and you're going to lose a lot of the tax advantages you have while you're a Canadian resident owning a Canadian company. So when you lose that status, your tax rate is going to go up. I think it's 26.5% in Ontario for a non-resident corp. You're also going to have extensive reporting requirements in the US and Canada, but there are ways that you can go about keeping the business open and running it and pulling dividends out of it, and also having lower dividend tax rates and taking advantage of the tax treaty. So there are ways around it.
And then could you give any, sample corporate structures for tax savings across both countries for those entrepreneurs that are have a US business as well as a Canadian business?
So just as an example, if you wanted to have a Canadian business open, um, you'd actually be re-domiciling it. So you'd re-domicile it from, usually Ontario is the case, to a place that has something called a ULC, so unlimited liability corporation, like a place like Alberta. And then you would own that ULC via an S corp in the United States. So that would be a particular type of entity that is only available in the United States when you're a tax resident there. And yeah, then you'd be able to, take advantage of quite a nice corporate dividend payment with a lot less withholding tax and other taxes involved. So there's one way to do it, but it's incredibly complicated. You will need to pay for lawyers to have the articles of incorporation drafted. You need to move assets. And so it's not a simple, oh, I'm just going to open this company.
Yeah, but if someone's making 500, 400K Canadian, what's, the attorney and lawyer costs, probably in the first year, they're going to get that back in tax
Yeah,
savings.
yeah, they'll probably end up getting it back. But it's something where approach experts when you're going to do this, because you know you may not even understand Article 10, which is this is what is covered in with this type of structure. So Article 10 of the U.S. Canada Tax Treaty. But you're going to need to speak to several professionals along the way to get this done correctly for you.
And can you offer like a one-stop shop where, we have clients that that it's more simple. They're maybe they just have one house in Canada they plan to sell, but they don't have
Yeah.
any corporate interest. They're an employee, straightforward. But then we have other entrepreneurs that making millions of Canadian dollars and they're going to need a lot of support. Do you bring in the attorney? Can you
Yeah.
do all that?
Yeah, we have contacts. So one of the people that helped train me with this sort of stuff, he was working in a big four accounting firm, and he actually has a reputation with the tax agencies here or in Canada. Uh, he's the reason a particular law was invented. Um, but we can put them in touch with lawyers and that kind of thing if they need to. They can help set these sort of things up. You don't have to sort of just find one person then go find another.
And Jason, how would you go about, managing the principal residencies when making the move? We have a lot of clients that are coming from Toronto, Montreal, Ottawa, cities and across
Mm.
Alberta. to the U.S. How to go about that?
So with the principal residence, you just need to understand that principal residence, the way it's taxed in Canada, is different from how it's taxed in the United States. There are provisions in the treaty, so it would be Article 13, that you would be able to take advantage of selling a principal residence in Canada and not having any taxes involved in it. But if you've moved to the United States, there's several things that you need to do. However, if you're going to do things where we get a lot of these clients where they'll have the principal residence, they don't actually want to sell it, they want to convert it to a rental property, then you're going to go and have a lot more reporting requirements. There's a lot more things to do, but it's all manageable.
And then how about, managing retirement accounts, stocks, and shares? I had that to ask because it's a common question. And then we even had one of the viewers also ask about specific retirement accounts.
So with retirement accounts, not all of them are created equal. Some are covered under Article 18 of the U.S. Tax Treaty, but there are strategies you can take to be able to, move country from Canada to the United States and also pull out funds from or withdraw funds at a lower withholding rate. But there's quite a lot involved in that. But generally with retirement accounts, you have to watch out because whilst it may be a regular retirement account like a TFSA in Canada, in the United States, that may be classified as a trust. So you're going to have a whole bunch of different reporting requirements. And I just want to warn people, if you own something called a PFIC, so you can type this in Google, PFIC, make sure that you don't own that when you move to the United States, because the reporting requirement for that is going to be more than the PFIC is worth to you.
Oh, wow.
Yeah.
So I guess for you, initial step is, hey, what are your assets and liabilities? Show me your personal balance sheet.
Yeah.
Do you anticipate, would you do any changes regardless of me in this move? If so, what? And then what changes you might be amenable to? And if you're not amenable to some, then you're going to have, there'll be consequences, or obviously there could be benefits as well.
Yeah. So I just like to warn people of what it is going to take sometimes when you move to keep an asset, right? So you may want to consider selling it simply because just the headache of keeping it is going to be too much for you over time. But there are some assets where, you just want to keep them anyway. So you may really want to keep your home. You grew up in this home, you may envision, or you may have had an E2 visa and you're going to the US and you expect to stay there 5 years. Yeah. And you want to move back and have the home. So, that's perfectly fine. You just have to realize that there are certain rules of engagement with the tax code, and you have to sort of work your life around those to a degree, but also try and work within what the client wants to make sure it's manageable, because you don't want to have to tell them to sell their home for no reason.
And what would you say, like, is it a net savings, someone moving from Ontario to Florida?
So I actually did a video on this in terms of taxation and then factoring in costs of healthcare and that kind of thing. And the best thing about when it comes to moving to the United States is the range and optionality that you have, and optionality being the key word. So you can decide, I want to move to a very cheap area. That's okay. Or you can move to a very expensive area, and that's okay. And you can change your healthcare costs and you can do all that. But in Canada, you really have this floor when it comes to cost of living. So you'll struggle to find in Ontario a whole house to rent with 1,000 square feet that's under $2,500, right? So it's, your cost of living really has a base, whereas the base range in the United States can vary, and it even varies very wildly depending on the state that you move to.
Yeah, no, that's well said. And we've seen parts of Florida become very expensive, but certain parts of Florida, it's extremely affordable with good public schools and reasonable other costs. And then a lot of our clients are also like in the Carolinas that, it's significantly less money than many parts of Ontario.
No, they don't look at Tennessee very often. Tennessee is very good in terms of taxes, healthcare,
Yeah.
um, and what you want out of life.
The cultural capital too, Nashville.
Yeah, a lot of Canadians will choose Arizona because this is something else you need to factor in. Do the state laws sort of work with your retirement accounts? And Arizona is one that is very friendly to Canadian retirement accounts. So
Okay. I thought it was just cultural that, people from British Columbia and Alberta were going to Arizona in the winter months, but I didn't know there was a retirement component to that as well. So you have the local laws, so you have the state. There's a lot to play with here. I mean, play
yeah,
with,
so you've got
play
the
with.
treaty and federal, and
Yeah.
then you've got provincial and state, and then your local laws in the US as well that you've got to
Okay.
work with. So you just have to remember that there's a lot to deal with. So sometimes you're going to have to do a lot of planning, especially if you've got a really complicated situation or you've got assets that are
Complicated, you mean you have business assets, homes, different
yes.
sources of
Yeah,
income.
so that would be the most complicated, would be business assets, home, retirement accounts. If you've got stuff from prior to moving to Canada, if you've got a situation like me where you've been working in another country and you've got something open, that all becomes reportable in the United States. It's reportable in Canada as well, over a certain threshold, but yeah, it can become quite a headache if you just have a lot of stuff everywhere. It's best to be clean and do it and be as succinct as possible with this kind of stuff.
Jason, I know you and your wife have a great practice on helping e-commerce entrepreneurs,
Mm.
across all different platforms. But I guess for a lot of those entrepreneurs, they're able to kind of consolidate just to have, a U.S. entity where it's a little easier than those that are providing, a physical a service in certain municipalities in Canada that they have to have a license for and everything. I imagine there's more flexibility for those type of online products and services.
Yeah, so if you've got an online business, it's going to be a lot easier for you to move as well. And it's especially the case if a lot of your, or most of your inventory or all of it is held in the United States, because really then you're just shifting an invisible entity. You're not having to shift anything in the warehouse. It's already there. And that's what we see with a lot of, because we deal with a lot of e-commerce businesses, mainly Amazon sellers and Shopify, some Etsy as well. But the vast majority of the businesses we deal with in e-commerce, their inventory is housed in the US. It makes more sense because the market is bigger. A large proportion of their revenue, usually 80-90%, is already from the US. So
We've gone through some common mistakes just chatting here for the last 20 minutes or so, but any other ones that we didn't talk about that you think are important to cement to our audience to be mindful of?
um, just try and be as open and honest as possible when you meet with someone like me, so we can really get an understanding of the assets that you have, because the last thing you want to deal with is when you move and you forget about something or something comes up and it just then becomes another headache for you. But when it comes to planning, sooner is better than later. We can always do something with later, but sooner is always better than later. And try to be just not messy with your finances. So keep your personal separate from your business. Don't mix your company assets around. Like if you have multiple companies, which some of our clients do, they'll have multiple ones. Don't just mix them around randomly, because you're going to end up with things like transfer pricing issues, that kind of thing. And just when it comes to mindset, always just be accountable and push yourself forward, because we notice that when a lot of people come from they've been an employee most of their life and then they're moving towards owning their own business on an E2 visa, that kind of thing. You have to sort of drop the mindset of being an employee that someone else is going to do something for you, and just work on the mindset of like, you're the one that's going to have to do most of this, and
Yes.
in hours that you don't want to work either.
Yeah, no, I think that's well said. I mean, I think it's a big, massive mind shift, and a lot of our clients, maybe as employees, they were working 40 hours, 50-hour weeks, but as an entrepreneur, the hours can be significantly more some weeks, and then go down other weeks or months. And it's generally worth it at the end, but usually becoming an entrepreneur for the first time, especially if you're in your 40s or 50s, is going to be a pretty big adjustment.
Yeah, we like to say change your mindset from fixed income to variable income. So fixed income is like you're just an employee getting a salary, to variable income where the sky's the limit, So
well, that's a nice thing too. We have a lot of Canadian clients where one will be the entrepreneur, and then one, is able to get employment. And we've had nurses where they're able to get, readily essentially start working. And it's a much easier process coming from Canada as opposed to other countries. And they can be making and contributing to the family, 100K, have great healthcare benefits. So they're not, they're paying minimal for their health insurance.
Yeah.
So we've seen a lot of those couples where one's entrepreneur and the first year is going to be tough, first 18 months are tough, but the other spouse is able to get a job relatively quickly in the U.S. It's a very free market. If you're not performing, you will get fired. If you're doing well, you will get promoted and you'll make more money.
As long as you have your SSN, you're fine. People aren't going to give you a hard time.
And then before we go into some more of the questions, tips for simplifying compliance and planning when moving.
So just start making lists. I mean, it sounds so basic, but really just start making lists, writing out like account numbers, that kind of thing, because you're going to have to do it anyway when you file your FBAR. So yeah, I mean, you might as well just get organized, write it out.
So the FBAR, for those that don't know, it's when you have a foreign account, like you maintain that account in Canada and you have to report it to the U.S. government.
Yeah, and you've got your 8938s and all these other forms as well, but you're just keep on top of all this stuff. When it comes to if you're doing an E2 visa, start doing, because we have a bookkeeping firm as well, but just start doing the bookkeeping straight away, especially if you're going to start hiring, because we see a lot of business owners where they'll start hiring in the US, but they won't be thinking, oh, I got to actually do payroll. Normally they're just thinking, oh, I'm going to transfer money to someone's bank account. And it doesn't work that way. Stay on top of your payroll.
You run into compliance issues for employment law.
Yeah. So
immigration, you want to get that W-2. So they're an actual employee versus a independent contractor.
Yeah, you can't be hiring 1099s all the time. They want to see W-2s, because even if your business is unprofitable, by the time you renew your visa, if they see that you've got 10 employees, all US citizens.
Exactly, that's a marginality test. We haven't had, we've had some denials in the renewals where one employee and the guy's making like 20K, not making much, or even losing money, but never seen a denial where the individual is making a lot of money or they have a lot of US employees.
Exactly.
So it's going to be one or the other.
Yeah, so stay on top of your payroll. The last thing you want is something called a trust fund recovery penalty, because that's 100% penalty that you don't want.
Yeah, I feel like if you don't already have a list, I'm sure you do, but like there are some like serious ones like FBAR, which I believe is criminal, and they're like the penalty you just saw where it's like you got to get this right, and then there's other ones that.
Yeah, so that's a big one I want to touch on. If you're in the US, or if you've moved to the US and you've still got a Canadian company, you're going to have to file something called a 5471, and those penalties are massive. If you're in Canada and you haven't moved yet, but you've got a US company, you're going to have to file something called a 5472 with, again, massive penalties. And these are tens of thousands of dollars in penalties. And the IRS is not going to get rid of them because they're huge revenue raisers for them. So you just need to stay on top of this sort of stuff, because it is a headache and it is boring to some degree, but it's something that you just need to, it's the cost of doing business in the US. That's what it is.
Jason, well, I'd like to go through a couple
Yeah, sure.
questions that are coming in. I guess this is more visa related from Mikias. Are there any visa options available for students or recent graduates looking to stay and work in the US? We've alluded to the E2 visa, which is an investor visa. No minimum amount, but generally in Canada, if you're a Canadian citizen applying in Toronto, usually $80,000 invested capital does the trick. We had a former consul staff on our YouTube video that's seen cases, way under, 50,000. But the E2 visa could be an option, as well as the O1 visa, non-immigrant visa. You got to meet 3 of 8 criteria, equivalent of the EB1A that we were talking about with Jason, where you meet 3 of 10 criteria. So there are definitely options available, whether you're a current student, recent graduate, whether you got to show you have the talent and that's well documented, or show you that you have the money that you're willing to invest, as well as there's a whole slew of work visas that we don't help with at this moment, like the TN visa that's available for Canadians, where you can get sponsored. Issue with that is if you're married, your spouse doesn't get work authorization. There's H-1B, that's a lottery system. So there are a few different options available for students. And then from Tomas, is there a way to avoid double taxation when living and working in the US? I presume double taxation between the US and Canada?
Yeah, so that's where the treaty comes in. That's what I do. So it's you can give me a call, but there are definitely ways available. It also depends on whether or not you're a citizen of another country that taxes based on citizenship, but there really aren't many of those. So
I heard it's US, Eritrea.
yeah,
I heard Brazil, but it's like kind of complicated.
Yeah, it is a bit Brazil, is a bit complicated, but there's very few.
And let's see. I mean, Trump made the pledge. I don't know if it was just to get US voters that are living abroad, but changing it, moving away from the citizenship tax system, that you could choose the residency. But let's see what happens there for US.
I mean, they've already got some pretty good deals for US citizens, the income exclusion.
What's that, the first 120K?
Yeah, 120K. So and to be honest, $120,000 in most other countries isn't really achievable nowadays. So
yeah. Yeah. And I guess, Jason, any concluding thoughts for those Canadians that are thinking about making the move in 2025, 2026, or even those that already have started doing the move?
Yeah, just plan ahead. So shortlist the things in your life and that are going on financially for you, and sort of have an objective. So when it comes to where you want to move, don't just say United States, right? If you're going to move to the US in terms of your visa and you're working all that out, pick a place that actually aligns with, your belief system, the business that you want to run, the way that you want to raise your kids, et cetera, et cetera, et cetera. Because we find that even my own family that are US citizens, they've kind of moved to some places in the US and it was just done for no reason. And then they worked out 5 years later, I don't want to live here. So they wanted to move.
They didn't like the ethos.
Pardon?
They didn't like the community, the ethos, because every state, even city level is quite different.
Yeah, so that's what they found out when they moved, was there's a lot of optionality again, but it's about picking the right place in the beginning, because once you start putting down roots, it's difficult to pull them up again.
Yeah, I think it's a very easy decision, whether it's a Filipino community going to Virginia Beach or parts of Orange County, to just kind of go and exactly in your comfort zone. And
yeah,
I had an interview with a South African immigrant too, that it's just common for certain cities and states, but to really open it up a bit and integrate. You have your fellow compatriots, but there's a lot of opportunity in the U.S. too to integrate with other other immigrants, like in Miami, where I think it's 50% plus
Yeah.
immigrant born, and the U.S. overall is 15%. So even if it's not the same nationality, there's a lot of people that have gone through the same experience as you, pretty much no matter where you are, especially in the coastal areas of the U.S.
Yeah, there's a lot of range is probably the correct term in the US. It's like that everywhere you go, but the US really does have a lot of flexibility in terms of the laws that you want, the schooling system that you want, etc.
Well, Jason, thanks so much for being on. What's the best way for people to contact you to discuss their fiscal move to the States?
So just type in fix my books or fixmybooks.ca and you can get in touch with us through our website. And yeah, anytime we're always around, we're always working because that's just the kind
Yeah,
of
you're
people we are.
responsive. Yeah.
Yeah. Well, we
Awesome,
like
Jason. Thanks so much.
language. All right. Thanks so much, Patrick. You have a great day, mate.
Appreciate it.
Cheers.